say is today is the day where Greece's future will be decided. It will become very apparent today.
Interesting. Okay, let's move away from Europe. Let's go over to the Federal Open Market Committee meeting, the U.S. Fed. They had concluded a two-day meeting yesterday, and of course, the markets, especially U.S. investors, always hang on the every word of U.S. Federal Reserve Chairman Mr. Ben Bernanke, and he did say, well, it didn't look like he'd said anything different from what we've heard over the months. They might, provide a monetary more support for the economy, mortgage-backed securities, and of course, keeping rates low, still at record lows of between 0 and 0.25%. But he did slash the U.S. Economic growth for between 2012 and 2013. What are your thoughts on that?
The market still looks bearish. I think it's still the way the FOMC is acting right now, especially with Bernanke's conference. What we have seen is in America, where we've got this subprime mortgage problem, we've got a housing issue, we've got an employment issue. At the back of the FOMC's actions, the dollar's actually gained strength. So looking at that and the way the FOMC is going to be projected to grow, I think the dollar will benefit from this. So I think it's going in the right direction. You know, there's the non-farm payroll data due out on Friday. I think it's got an absolute excellent chance of consolidation. No. I think despite Bernanke's various historical methods, I think they're on the right path this time.
Now, he keeps saying, and he said over the month, that the Fed could or would bring up additional monetary stimulus needed to aid the economy, boost the jobs market. How has all of this been affecting the dollar or in the long term? And it's funny because even with all of this not so encouraging statements from the U.S. Fed, we still see the dollar retaining its status as a safe haven asset. With this Eurozone thing that we're having, more people, more investors have run into the U.S. dollar.
Absolutely. I mean, once again, it's a game of politics. You know, the euro's sliding, and there's only three major currencies which are going to benefit from this. The dollar, the pound, and the yen, on a larger scale. Now, the dollar, US, more vocal, once again, more out there in everyone's faces. They're going to be set to benefit the most, and it's paid off. The dollar has strengthened. You know, the more vocal I think they're going to be, the more strength they're going to get. I'm surprised that the UK is not following suit.
Now, so okay, let's go into currencies now. While we know the dollar, despite all that's been happening, the bearish developments is still gaining strength. Now, for other currencies like the euro, the yen, short to medium term outlook, what are we looking at?
Ooh, one thing I can say, Esther, is over the last, say, 5 to 7 years, this has to be the most volatile time of currencies. There's just no prediction. I mean, I'd love to say, you know what, the outlook looks good and some of the majors are going to really strengthen up. But by this afternoon, when the guys come out of the Cannes meeting, who knows what's going to happen. So, but saying that, and despite all of these intricacies and all these problems taking place, the majors are still going to be set to grow. The dollar is going to strengthen. The pound is going to strengthen. Depending on how the euro debt crisis pans out, I still believe the euro will strengthen in the long run.
What about the yen? Because remember a few days ago, the Japanese government did intervene at the forex market, to help curb the rise in the consistently strengthening of the yen. So where would we see the yen also as a safe currency asset?
I think traditionally the yen has always been a safe haven. Okay. It's the more secure of the currencies. And for the Japanese to take this, what I believe, an excellent stance in intervening, has strengthened the currency once again. They've reinforced to the world that, you know what, we don't have problems like the Greece problem. We don't have a major subprime problem. You know, we are a safe haven. So it's a good thing. Japan is, as traditional, they're the safest players.
Now, okay, let's still staying with Asia. We saw some not too encouraging data out from China this week. We saw manufacturing activity slowing especially China. Now, we know that China, the world keeps looking to China to help drive global economic growth. But sometimes one month we get encouraging numbers, the following month we get weak GDP numbers. And everybody keeps talking about what kind of landing China is going to have or get. Where does China stand in all of this?
I think China is very strategically placing itself as to taking the back seat. It's looking, it's watching, it's assessing the marketplace. I don't think the Chinese economy has got a lot to worry about right now. There's always going to be a demand. Hit 2012, if you look at, say, just Africa as a continent right now, of the 50-odd countries, if you just look at Nigeria's GDP, it's growing. Imports are growing. Imports are growing day by day. Every single country in Africa seems to have a growth pattern behind it. Countries are coming out of wars. Countries are coming out of economic crises. China will grow. There's no question about it. But right now, China is doing the most sensible thing and playing safe by taking a back seat and letting everybody else play the charades.
No, it would seem like, because whenever these leaders come together to talk, they have all these summits, China, the name China always comes up. It looks like everybody wants to give China this role, this forefront role of, I don't want to use the word savior. No, because I'm not sure I use the word scapegoat, because in talking about the European Financial Stability Facility, now China is expected to come, help boost that particular fund. China is expected to buy some time back when Italy was in trouble and needed to buy bonds from the market. China was expecting China to buy bonds. So China keeps coming up, in these meetings, and it looks like China is being given this particular role. So do you think would you say China is prepared, or China will play politics with it? Because I know China, of course, will demand.
China will do everything it can to protect its financial and political investments overseas. If it means that they can secure exclusivity or distribution or exports to Greece by interfering and purchasing bonds, which yourself know as to have absolutely no value now, they will do it. That's why people refer and point to China, because China will move out to any country in the world and offer its services, offer its cash to protect its export interests.
Okay, now you're a forex and commodities brokerage firm. Let's go into the commodities market now. We haven't talked about gold. Nearly a 1% gain since from between yesterday after the FOMC meeting. Now, we know traditionally gold is known as a safe haven asset, and we know that gold has racked up a significant amount of gains this year. Where do we see gold, the direction for gold this year? How has gold fared so far, and where is gold heading?
Gold, Esther, has been another weird one. Yeah, I mean, in September it hit 1920. The gold rally started. It's once again unparalleled in all of history. Gold has risen to its peaks overnight, literally. And now it's dropped down to 17 something. Yeah,
1,700, yeah?
Yeah,
this morning in Asia.
Yeah, that's right. Now, personal predictions, I think it's going to go up again.
But there are projections that gold would hit by the end of this year $2,000. Do you see that happening?
You know what I do? I do see that happening. And I see that happening for a few reasons. I see that happening because the dollar, by the end of this year, is going to strengthen, but because of all the other problems going on in the country, it's not going to be an investment capital. Africa, the whole world's attention is pointing towards Africa, where a majority of the gold reserves is. So people are going to start investing into these precious metals. So I don't just think it's just going to be gold, but it's going to be the silver and the platinums and the palladiums as well.
Okay, now let's quickly go away from gold. Now, how all of this is going to affect the Nigerian economy. I can let you go without talking about the Nigerian economy. Now, according to some reports that I got this morning, the Nigerian economy may overtake South Africa by 2025 to become the biggest on the continent as oil prices climb and consumer spending in Nigeria expands. Do you agree with that particular report? You know how volatile the oil market can be. No one can predict what direction oil can go. Now, if they're saying that as oil prices climbed, oil prices, yeah, we've seen the seesaw back and forth, sometimes 2 to 3 steps forward, 2 steps backward. But now we've settled at around $90 per barrel.
Firstly, one of the reasons why I'm here too, why Nigeria? Nigeria, of the 50-odd countries of Africa, 53-odd countries of Africa, Nigeria is the only contender to overtake South Africa. Why? Because as a projectile growth, you've seen Nigeria go through various issues and come out trumps. The export of oil just over the last year has gone up by nearly 10%. It's I can't remember the exact figures, but it was something close to 2.4 million barrels a day. And now it's standing at, I think it's 95, are you quoted for the dollar per barrel?
Yes, 92.
$92 per barrel, and Nigeria having no intention of slowing down whatsoever, but rather investing more into the oil and gas infrastructures. It's going to grow. Seasonal harvesting, you look at seasons within Nigeria right now, they're so fructious right now that the exports are growing. The productivity, the internal growth is growing. And Morgan Stanley, they are a world authority. I'm not going to